So in this video, I'm going to show you how you can save money on closing costs without having to cut corners. Hi, my name is Jerry Pinkas, and most people think that they have to skimp on things in order to save money, but that's not always the case. So I want to show you 6 smart ways that you can save money on your next home purchase. Give me a thumbs up if you're ready. Now, there's a lot of little known ways that you can save money without having to sacrifice quality or service. So if you watch this video all the way to the end, I'll reveal them all. Now, with inflation, the cost of everyday stuff keeps going up. You need to save every buck that you can. Closing costs can add thousands of dollars to your home purchase, but there are ways to save. So, if you finally found your dream home, I just want to say congratulations to you. But when you're about to close on that deal, you're going to find out there's a bunch of expenses that you didn't expect. They're called closing costs. Now, this can surprise any first-time home buyer or sneak up on you if you're refinancing as well. But fortunately, there are ways to save money on closing costs, and we have the scoop on them. So what are closing costs? In a nutshell, closing costs are fees generated by your lender, the bank, that's giving you the mortgage. But hopefully, you're already working with one of the best mortgage lenders out there. That would be covering some of the costs associated with creating your loan. These fees are for things like a title search, a home appraisal. But of course, these fees can vary by your location and the type of mortgage that you've selected. But the sum of these fees, the totals, can be anywhere between 3 and 6% of the total price of your home. So you really got to plan accordingly. But if your lender, which is all of them are required by law to give you a loan estimate and show you all these fees within 3 days after you submit your mortgage application. So make sure you see that. So what closing costs can you actually shop for? Well, there are some closing costs that you can shop for and allow you to compare prices and then snag the best deal possible. These costs include a title search binder, insurance binder, the survey, the home inspection, and the escrow agent, which can also be known as the closing agent, the settlement agent, or in some states, like South Carolina, the closing attorney. So how do you do a comparison shopping on this stuff? Your best bet is to start off by working with your local real estate expert who does this every single day. Why? Because they're going to know who may feature the best options for your scenario. Now, my team does this every day and they get asked all the time, but if you don't have access to the local real estate expert, you can check one of the online marketplaces where companies actually pay to be listed. But don't forget to factor in the customer reviews. Now, when you're comparing these costs, as with anything, the cheapest option is not always the best one. So just remember, which fees can you negotiate with your lender? The success may vary when it comes to lender fees on a bank or a lender. Each one's going to be a little bit different. Now, some of these costs you can attempt to negotiate: the rate lock, the underwriting fee, the broker rebate fee, the application fee, or the loan processing fee. But FYI, for your information, if your bank simply has one blanket charge for all items like insurance underwriting and all that kind of thing, there's nothing wrong with that. However, if you do see more and more line items pop up with generic terms like delivery fee, okay, that's a sign that you should question your lender about the fees. Number 1, start by asking. Ask the seller when you're negotiating your contract to purchase to cover some of your closing costs. Now, this may sound like a fool's game, and you may be able to get some financial assistance with closing costs from the seller. Asking the seller for help on closing costs may be harder to accomplish in a seller's market, but here's a question for you. Why should they budge on anything when there's so little housing inventory? Well, the seller might be willing to help you out, especially if you've paid a fair amount, the asking price for your new home. Perhaps they have to they'll pick up a tab for a pest inspection. Now, this may not seem like a lot of money, but if you don't ask, you don't get. A pest inspection, or what they call as a CL100, can range, $100 or $200. So it's either out of your pocket or the seller's pocket, and it's never a bad idea to ask. Number 2, set your closing date near the end of the month. Okay, you don't have to get into the nitty-gritty details here, but why this could save you some money. But if you set your closing date towards the end of the month as opposed to the beginning, you're going to save some cash on interest. Now, if you're curious to how this works, have a chat with your mortgage lender. This isn't going to save you a large amount of money, but every nickel and dime adds up and it goes right into your pocket. So when it comes to closing costs, you got to ask. Number 3, ask your lender for any possible rebates or discounts. Now, this is in addition to asking your seller to help offset your closing costs, like we said, but ask your bank about programs that can get you a discount. If you're applying for a mortgage through your existing bank, someone that you have a checking account or you've been dealing with for a while, they may offer discounts for clients, for previous clients. For example, if you have a credit card with one of these large banks or a preferred rewards program, or you're a member of a warehouse membership, go to them, because if you don't ask, this could help chop off, $600 on your origination fee. Or perhaps you've paid off a personal loan or a bank loan or a car loan with the bank and received money-saving offers if you take out another loan with that lender. So it doesn't hurt to ask. And number 4, investigate the grants and other programs. Now, I'm going to link below another video on a program with $17,500 grant program, and we've had some clients who have taken advantage of that. But depending on where you live, you might find that there are grants available for folks looking to purchase a home that can save you some really big money. Now, for instance, if you work in the public service sector, there could be financial assistance programs available for you. Many states offer special programs, especially to assist first-time homebuyers. These programs can help pay for closing costs as well as down payment assistance. So if you're light on cash, look into that. There are other programs that require you to attend maybe a home buyer education class or stipulate that the house must be a HUD-owned home. Number 5, should you buy points? This is a common question today that I'm getting a lot because interest rates are going up, right? So if the mortgage rates are already low, you can save some cash by not purchasing mortgage points to lower your interest rate. After all, closing costs of mortgage point is 1% of your total mortgage. So this can be a lot of money. And it's due when you go to settlement. So you got to come up with the cash. But buying points may or may not be worth it. And here's why. If you won't be living in your house long enough to reap those rewards, it may not be worth putting that extra cash down. So you really need to calculate this step in order to save money. If the interest rates are high though, this should be something to consider, paying interest rate points that could lower your monthly payment. Number 6, consider bundling costs into your mortgage. Now, let's say that you had to scrape together your down payment and you wound up paying more than you expected for your new home, which is probably the case. Most people are finding this. That means that you could be cash strapped, but you may need all the help that you can get to get this home to close. So if you're in this situation, ask your mortgage lender if they can tack on those closing costs into your loan. But you need to compare what this cost is, because lenders may charge a higher interest rate in order to do this. Rolling the closing costs into the mortgage doesn't mean those fees are disappearing or they're gone. So be aware that you may be paying a little bit more interest rates with those fees as part of your loan. You only want to do this if you absolutely have to. So here's the bottom line, guys. Buying a house, it's complicated. You may start this process and wondering, oh my gosh, where do I start? And then at the end you feel like, oh, you're an expert. But if you manage to save on closing costs along the way, all the better. It goes right to the bottom line. It's your money. It goes into your pocket. So there are many options that you need to consider. If you've ever worked with my real estate team here in Myrtle Beach, you already know that they're all about helping you avoid the pitfalls that are costly. They want to make sure that you're working with the best options. But if you live somewhere else in the nation, I hope you enjoy these videos and I hope you enjoy your new digs. There are more videos here on this channel, so if you subscribe, I'll see you, and I do mean you, in the next video. Take care, guys.